Hello, everyone, and welcome to the Trader's Voyage. So, this was week one of our micro account challenge. I have funded my account in Interactive Brokers, and we took on some trades. Now, first of all, I would like to say, under trading psychology, with the pressures of self pressures of going live with my trades and waiting a bit of time to get everything set up with Interactive Brokers and not being able to put on trades while money was in transfer. I picked up a little bit of bad psychology going into some of my first trades, and we will get into that right away. So, first of all, we want to take a look at SPY. SPY this week was doing quite well. Monday was a kind of a nervous day, but didn't move around too much, which was good. And we stayed basically going straight across, which is great. That shows what I like to call confidence in a chart. On Friday, which is the close of the week, we had another run up. It gapped up in the morning, and then we've had also another nervous day of going up. Now, in market news, that is probably relative to the US government deciding to raise the debt ceiling this week, which means that markets have access to money. It means that capital projects have access to money. Businesses that rely on government contracts are going to have money. This means that it is more or less business as usual in the United States. That frees up money. Now, whether or not this is going to be a long-term pull up in the market, we're not sure. But if we look back, we have just broken out of the top part of a long range with SPY, which is what I like to use as a general indicator for overall market. So if you look here, we will go here, and that, my friends, is the basic range that was created over the last almost a year. So we have just kind of come out of this, which may signal. Now, we had a top over here back in August 22, which is what we're hitting right now. So let's do this. Let's hit another horizontal line right there. And it is very nervous hitting this point. So markets are in the point where it's signaling a bull market. If we come back up into this zone, well, technically we are in what would be considered a bullish zone. We're in the beginnings of a bull market if this trend continues. Or if it goes sideways within the top of this area, this would still be considered bull market territory, because we could, as long as we go sideways in here and not dip down into here, we are still looking pretty good. Even if we come back down into this range, we're still pretty bullish. So that means that stocks that are going to do well are just going to do well. Stocks that are even poor stocks might get some extra money thrown into them. However, if we go back below into this area, that means even stocks that are good stocks are probably going to lose money. So let's get into the first trades of the week. very first trade of the week, a little preemptive, which turned into a loser, is APP. Let's look at this. We'll blow this up. I've already put my notes into this trade. As I go into the trades, I try to get this done. So let's explain here. On my screener, this is what we're basically looking at. So APP, now it doesn't really matter to me what the corporation is, what they do. I'm just looking at charts and trying to decide if it's bullish or not. So this particular chart had a gap up here on Thursday, May 11th, and continued to go up, has what we call a pullback, starts coming back up, and this here would be a breakout. Now, my day job, doesn't really allow me to watch charts. So, in the morning, if I see something and I want to get in, I need to just get in and push the buy. But I always have risk management built into every trade. This particular instrument I purchased in the morning at 25.65 at the pretty much the very top of that morning. And all morning it came down and knocked my stop loss, which was 8%. So the stop loss on this trade was basically a full 8%. Let's take the measure here, something like that, all the way down to here. Yeah, just under 8%. And the reason I went to that is because this is the range in which this instrument built. So if it went past there, it would probably fail, which, as you can see, did continue to go down past that range, closing out the day, then the next day staying below that range and continuing down. So therefore, we got out minus 8%, which only is a very small fraction of account size since we have multiple trades. So the very next trade I got into would have been Uber. Uber is still an open trade on this week. And let's see, we got into Uber on Tuesday the 6th, very first thing in the morning. I looked at the chart. It looks like it's strong, looks like it's continuing to go up. So I got in. Now the day created a doji. I have a stop loss risk profile on this one. Let's go over to right about there. Accuracy is not super important at this stage. Now, this here, I have my stop loss. I believe I have my stop loss right here at about 5.5%. That is kind of more than what I would like for this, but stocks can get pretty volatile, especially in the way that the overall market is a little bit nervous about going into the new bullish zone. But it's at 5, it's not my maximum of 8, but this structure of this trade is what I'm interested in. I believe that if it were to break this structure of many days of trading in here, that it would continue down. So far we are in profit. It's a swing trade, so of course the day that you get in, it wants to come down and test your patience. So then the next day it came up, and now we are in profit. The very next trade we took on in our portfolio is CYRX. This one, the day I got in, seemed like it was going to be a winner and stay a winner. And I will also mention about my trade psychology that I didn't take a deep enough look at this one when it came up on my screener and I got excited about it. Because if I looked at the past history, it would show here that it tends to go up at 3 days and 3 days and 3 or 4 days. And here we have 3 days and then we're into a pullback. Now, if I take a bigger look at this, we go back and look at this here is a double bottom. We have a massive capitulation. We have it stop right here at 1565, comes up and tests that area again, just below that, and then comes screaming right back up. Everybody is very confident that that is the bottom, and they keep buying and buying and bringing this thing up quite a bit. Now, from going from that point there up 60, almost 70%, then you're definitely going to have some profit taking and some nervousness whether or not that's going to be continued. So this, I would say, is what would be considered consolidation. And then it's built this range right here, which let's draw that out for you so you can kind of see what that looks like. So what we'll do, that hits most of the bottoms. So lots of times when something punches through a range and then comes right back up, this would be considered a shakeout. And now it's come back up. And as you can see, if I was patient, but you never know, these things can just run. I mean, back over here, it's a straight V right up, so you never know. And because I don't have a job where I can just sit and watch my computer all day, I got in the morning, it went up, and I was in profit immediately. Stayed in profit at the close of the day. Next day, stayed in profit. And then we had a down, but it is down and it is bouncing back up from the 15 moving average, which we will go into that in later videos. But this is just a recap of the week. So currently we are down on this trade. However, this just looks like a pullback and will be bouncing, and I'm expecting it to go up this way for over the next few days and be in profit within mid next week. Our next trade here is Calv. So on Calv, I have previously made money. So Calv, I do believe the last time I got in was somewhere in this area because it was a breakout. And I rode this trade all the way up to this very day and got out here. And the reason I got out there was because this day was highly volatile. And then the next day was highly volatile and closed with this long wick. And I had already gained 30% on this trade. So I got out. Now this has been in my watch list for the remainder of the time because I watch my winners in case it's just a pullback and wait for them to go again. And I thought this was going to go again, so we got into it because it's been a steady winner before. However, it is pushing its limits of the trade because my setup for this and my exit strategy, so we got in here, but I'm taking on about 4.5% risk with this one because it is this area that I believe, this structure, that if it broke that, which we can signify that with a line right about there, is, if it broke that, would be no longer confident. And as you can see, it seems to be bouncing along that area. So we will see how that carries out next week. Azul might have been also a little bit of a presumptuous trade, but this does seem to have a lot of potential. It's been on the run for a while. It's a bit, this is the riskier side of trading where something like this I'm normally not comfortable getting into, but I've also been working on my trade psychology not to be fearful of getting into these things because they can run for a very long time and make money, and you sit back and FOMO. You will feel though that you're losing out because they keep running. So on this particular trade, because this one I might take on a tiny bit more risk only because it's running, and if we go down 8% from where we got in, this one I took on a little bit more risk on this trade. I'm not out of it. I did move my stop a little bit because it is a running stock. Now, so I moved my stop on this one 13%. And that I will explain because this is the 8 moving average. And this is the recent structure that was built. So you have to be prepared of once you get into a trade, especially one that is running, that it could do a pullback right back down to these areas. And because I can't sit there and watch every day, I have to take on a certain amount of risk. Now, that being said, this is not I didn't put as much money on this trade. I think I put maybe around 600 or so US dollars. So it wasn't like a full $1,000 on it because it was higher risk. And I was increasing my risk limit of this, which I don't really like to do. But as it turns out, not in profit yet, but it still does look like this is just a pullback, just like this area here. So we will see how this turns out. I might move up my stop now to having the bottom of this candle, which would be 8.5% now, because I think if it were to come below that again, it would probably start to fail. And the next trade that we are in, this is another one that was running huge the day before, and pre-market it was also looking like it was going to go. What I like about this one is that it has this double bottom, which is normally a really good sign. The only thing is we have these 3 top areas over here, which could indicate another try to the top, which it looks like it is failing this top, which means I might want to be looking to get out of this trade. However, we are, I believe, just slightly out of profit on this, not even by like $1, I don't think, on the portfolio. So we'll see if this is just a pullback before it continues up. This one I'm probably only going to take on a small amount of risk, probably to the 8 moving average, which is that blue line, which is 4.5%, which is also about 50% of the body of this candle, which is also this area over here a big structure of lots of trading in that day. So you could see it bounce all the way back to here, but so far it looks like it wants to hold here, which is the top of that structure, which is good. That looks like we might be building a resistance level. Very next in our trade for the week is PDD. Let's get into here. So I got into this one. This one's been on my radar for a while now. However, we have this constant downtrend that has a change of character followed by a pullback and up. So this looks like this is the bottom. So this would be a bottom seeking play. However, we are in a bullish scenario. We have the 8 above the 15. We have this nice structure here. I tried to get in here right away in the morning, which would mean we would still be in profit. However, we can look at this note and it says technical difficulties prevented morning buy-in lower than 2.5% lower. So I had some troubles with Interactive Brokers. I was just trying to convert the last bit of my Canadian dollars to US to get into this trade, and just having a bit of trouble doing that. Interactive Brokers was super awesome about fixing that and converted it for me over the phone. I got that dealt with within about an hour, which meant I ended up buying on this almost at the top of the day. But this is still a very bullish trade. And as you can see, the very next day, it still went up. And we will see what next week brings. And we are just coming up above the 200 moving average. And everything still looks very bullish on this trade. Okay, so as you can see, we are in my Interactive Brokers, the Trader's Voyage Micro Challenge account. This here, this number is in Canadian dollars because I am Canadian, but this is pretty much just under $4,000 US. Technically, I put in about $4,100 US to start the account. And we're only down a tiny little bit in the first week. So I will discuss my trades all next week. If you want to keep following me, and like and subscribe to the channel, and we will teach you a little bit more about trading and how I trade.